Yeah, also good evening. Good evening, big traders. How is the trading going? How are you doing? Hope you people are making profits. How is the trading going? How is the PP? Yeah, what's up? Come back to my YouTube channel. It's your boy Young Face underscore ICT. The YouTube, the ICT YouTube student. Yeah, this is a quick video I want to make on the bias. I know I've not made any other video since after the last one I did on my YouTube, which I posted, and you saw the delivery, which I called, here. We the last video we explained the how price will drop to this particular price level, explaining if GSY fails to drop and it continues to rally up, we will see a growth to this week. But if we see the GSY reduce to rally up and just drop to the safe side, we'll be expecting price to get to this fair value gap. But looking at this gap here, I see this as a breakaway gap. I'm not looking at it again for price to deliver and fill it, because look at how many candles which we have delivered to that particular price point and drop to fill the fair value gap, but it refused to go. That break lower, add another break lower. This for me is a breakout of structure. This is a swing low, so it broke lower. So we have a fair value gap plus other block, and price is here. So I'm looking at, if I see valid entry within this price point, I'll be going short to target this swing low. I'll be going short to target this swing low. These are called the barriers. For those who ask me, this is just a simple thing you need to do. This is just a swing low. This fair value gap. Once this fair value gap is filled with this other block, this is also a swing high. Once this fair value gap is filled with this other block, I'm expecting price to drop from here at least to this block here, to this candle here, and drop to this here. This is exercise liquidity. So this is what I'm looking at on EU. This is EU to drop to this side. Let me check DSY. Let me check DSY. Okay, let's check the 1 hour face. The 1 hour other block, the block, and the other time frame PDRA. We'll be looking for valid entry within this particular price level to go shorts. I've not seen anything too clear for us to go short. We just cleared this, but remember, one of my rules is I cannot buy once price gets above here. I cannot continue buying once price gets above a buy side liquidity or a swinger. I cannot continue buying till it offers discounts within that particular price range. Because if you check the discount within this particular price range, you will know that price is still high. Like if you want to buy something is sold at $10, $10, you couldn't get it within that $10, and the current price now is like $15, or it has doubled. Okay, let's say $15. Instead of you buying at that $15, you need to wait for price to at least offer discount, for sellers to offer discounts, so that you can grab another opportunity to be a buyer. Like if you want to buy, like here I'm just taking the scenario, like you want to buy something, you want to buy a commodity, just the normal things you use at home, you need the sellers to offer you discount. So we have taken the buy side liquidity. For me, price is extremely high. I can't continue buying. Everybody is chasing price. So I will be looking for opportunity to get short within this particular range. If I can see anything that can make me go short, I will be going short. Once I get short, I will be targeting at least this fair value gap here, because it is below the 50%. This fair value gap here, if I see valid entry, I will get to here, yeah, this particular price range. So this is what I'm looking at. I'm still looking for opportunity for the 1 hour to show me some displacement to the downside. Assuming this candle here, when they displace this swing low, I would have said, okay, since we are going up again, we are going to find another of a value gap above premium level to get short. So I'm still calm. I'm still calm, looking for more context for us to go short within that particular price point. You can see here is a recessive liquidity resting. Here is recessive liquidity. Low is this swing low. Price took out this swing low. For me to continue buying within this swing low, if I want to be a buyer, I would like this fair value gap here. Once the fair value gap has been touched, I'll be looking for context to go long. But since is in my price is in my higher time frame PD area, I'll be looking for opportunity to get short. That's just it. I'll be looking for opportunity to get short. But if I don't still see anything that will make me go short, we continue the long. Let's just check the DSY. What the DSY is trying to show us. The DSY is trying to show us the DSY. During the last buyer cycle, let's make this full screen. During the last buyer cycle, that was talking about the new thing ICT introduced this 2023. I'm seeing this 2023 consequential increments, the 50% of a week is also a model, is a PDRA, but I'm not that consistent in using it. I'm not that consistent in using it. I've not used it before, but once I saw ICT using it, I picked up this particular price printing. I code this on my YouTube. I was measuring this 50% of this week. If price gets above this other block here, this one here, this candle here, if it gets above it, we'll be looking at the 50% on this candle as a buy side drawing liquidity. Buy side liquidity, we'll be looking at the 50%. If we still see valid entry after the 50% of this week, we'll get to the week itself and clear this buy side liquidity, this finger here, clear this buy side liquidity here. Watching our HTC, you can see, let's get to business, let's get to work. Maybe you think my chart is very dirty, and this is just, I left it because I'm just using it to monitor some things. Anything I see is teaching. I'm not in the futures trading, I'm not in this, I don't trade in this. I'm not saying that it doesn't work. I'm just, everything I see is teaching. I'm just putting it into EU currency, the forex market, all of them, everything works. So these are the DSY, the dollar index. When price was here, we were called okay. When price got here, we saw this. I was also mentioning this. If you remember this is called a volume imbalance. I was calling this volume imbalance. I was calling it when price got to this other block. I was like, okay, this is a volume imbalance. If you get this was a Friday, I think so. This should be on Friday. Okay, this is Monday. This was on Friday, this was Monday. I was like, okay, I don't trade on Monday. Monday will show us what we got, whether we are going to go up or we are going to go down, whether this volume imbalance is going to support price. So Monday showed something good. We saw this price on Monday. On Tuesday we opened, we rally the Judas swing, which is one of my concepts. If I don't see Judas, no entry. No Judas, no looking for 2022 model. So I saw price open here, dropped. The volume imbalance supported price. We rallied up. This was on Tuesday. On Wednesday we came. I called here. I measured the 50% of here. This week the 50% I called it, and I also called the swing guy. As the next draw on liquidity on Wednesday, on Thursday we also had profits, and on Friday I'm not that good in trading Fridays, because Fridays is the reverse of what the weekly profile I've been doing, but it's also good. So when we go to the 50% of this other this week, I was like, okay, let me see if we continue going here or we drop massively. I will drop, because we also, if you watch so clearly here and so closely here, you see that when price was printing, price created a fair value gap from here to here. You can see there is nothing that will move here. There is no there is no set side that have been offered within this particular small range. So I was like, okay, since we have, after there is also something ICT said last year 2022 when he was teaching. I think that should be when he was teaching bias in that 2022 mentorship. I can't remember that particular video, whether it's is it episode 20 something or episode 17, around that. I can't remember. After 5, if you are bullish and we have like 5 consecutive bullish candles, taking your buy side liquidity, you should at least expect a a retracement, a discount, price to offer discount before you continue your buyers. So after on Monday, after this, I started counting 1, 2, 3, 4, 5. After the 5, you should be expecting price to drop to discount. Price should drop to discounts. Price should offer discounts so that more buyers can get in price. Everybody, more buyers can get in price. So I'll thank God during the printing we had a fair value gap. If you watch these 2 consecutive candles, it is called another block. This is another block. Is higher time frame key level, which I see the copy DRA, which I marked here. If you watch here, this other block price dropped, this other block we reacted to the upside. So since price have dropped to this other block here with volume imbalance supporting price, you can see the beautiful reaction here. You can see the reaction once price drop. This is today's action. Price drops. Once price drops, we have this we have this reaction to the upside, and that's very beautiful. We have the key level reacting very beautiful. So what am I looking at? I'm looking at going more long from here. Sorry, I just want to, okay, going more long from here, going more long, targeting the previous day high, and probably if you can get above here and target the finger up here. You can see there is something ICT used to say. If you watch the after taking the previous day high, you drop to take the previous day low, because I couldn't call these buyers on my group because I was a bit busy on myself. I was running other things, I have other things I have to do to keep the hustle real, you understand. So I'm watching tomorrow. Tomorrow is Thursday. Tomorrow is Thursday. We'll be looking at, and I only trade London. That's why I only trade Euro. I only trade London. As most times I also come to the chat. Like today, I was in the chat. I was looking at something. Let me show you. Let me show you. Just remember, I'm okay. Let me just put your eye on what I'm looking at. I'm just looking at. Let's get back above here. Let's just start being above here. It will be so good for me if I see price. If I see price going here. So I see price going there, I'll be so beautiful. I'll just call it the buy side. Just looking at this previous day, buy side liquidity. If you can start rallying up here, I'll be it will be much beautiful if I see price running up here. Maybe the 4 hour, check the 4 hour, everything bullish, everything is bearish, everybody dropping. You can just look at the okay, this is a value gap. We drop. We feed it, we dropped. This is a break market structure. Price have already touched the fair value gap, dropped again, which another entry to go short. But I'm just looking for entry here to go long, but wait till London. London will give us more context on what to do. London will give us more context on what to do. After this, I see this as a breaking, as a shift to market structure, break to market structure. No matter what, I see this as break to market structure. Fair value gap price dropped. I reacted. I wished we took this swing guy up. I wish we took it here. But this is a fair value gap with another block. If I can see also valid entry within this particular price zone, I think we should be going on. But London have to tell us the final decision. For me, if you want to trade with me, you have to join my WhatsApp group. That's where I call these things live. If you can see, I call all these things live. I show them, I tell them what I'm looking at. I tell them the fair value gap which is printing on London and all those things, all those type of things. So that's just it. If you want, look at this gap here, look at this gap. Let me just show you. Let me give you something. Look at this gap. What happened here? There was no price here. There was no market here. There was no market. It was like how I explain this is like you went to the market, only sellers came to the market. Like, okay, let me say only sellers came to the market. Nobody is buying your products. You see that, so you stay in the market till from morning to night and you take your product back. So there was nothing offered here, nobody was in the market, only sellers came, sellers sold. After they sold, there was nobody have bought within this route. I should be looking for opportunity to get here. This is what we call rig gap. New week open price, new day open price. This is it. This is a gap that created on Tuesday, going to Wednesday. This gap. So I was like, that was what I was looking today. Was I looking at? Okay, I was like, okay, I was selling this money. I was selling. I said I was selling. So that's just it. We have to find some context that will make us go long. Maybe some people will see, some people will see ICT concept. One thing with ICT concept is like find what works for you, because everything will not work for you. Just find that thing that works for you and just stick to it. You can just see this. These are okay. These if you just highlight here within this ring, these exercise. These are an accumulation. If you watch here for here to here, these are an accumulation. So prices are taking the sell side, the buy side dropped using to engineer to the sell side. So some people, some traders, if this is your contest, if this is your contest, it's also good. Here is a breaker block. Just there is a breaker block. Once price gets to the breaker block, you can see there are some also valid entry that price drops to the downside. Price is dropping to the downside. But everybody have his own concept based on what I see have been teaching. So it's not about your strategy, it's about your psychology, and it's about what you're looking at. If the market gives you what you're looking for, it's not randomly distributed. If the market gives you what you're looking for, you need to follow your strategy. So see you guys in that number one. Okay, so let me just show you small thing that I was doing with my EU during the afternoon New York time. New York time. No, I'm not in New York. I'm not in New York. I'm in Nigeria. So look at this. Look at this. I was short. I think I was short here. I was short within some price range here. I was short within here. I was short here. So when price took out this swing low here, this swing low here. So I was like, when price got to this video area, price took out this swing low. This is energetic. Fair value gap here. Would you have been entering here? Yes. If it's me, I would have been entering here. If I enter here, my stop loss will be above this swing. Normally, my stop loss manager will be above this swing. You say, what of this fair value gap? The fair value gap, I will see it as a breakaway. Why? Because you have multiple opportunities for price to fill it, but never got there. So we dropped to the downside. I would have chosen this fair value gap to enter here. But if you refine to the 3 minutes, because I'm not using the trading view premium, right? I'm just using the free one. So if you refine, you have seen this fair value gap, but it has been already been filled. But remember it can also be filled again. ICT says so. It can also be filled, so they can redeliver today and drop. Most trader will be afraid. So not just it. But where I took some short position, I think I took some short position was yeah, I was looking at one price got here. I was looking at one price got here. I was seeing this is what I call, there is something I call Gaussian distribution. This here when price this here, price took out this side, price failed to take out this side. You know, this will be a long tie high, a long tie high. This will be an immediate tie high because this is a fair value gap. It went to fill a fair value gap. It dropped massively. This is a shift in market structure. This will act as an immediate tie high because also it went to fill a fair value gap. But I see this as a short term high. It can also be traded to and traded above. But I don't want to see this high to be traded above. This is another one secret and within this price. But I don't want to see this high to be traded above if I'm short. If my bias is correct, I don't want to see this high to be traded above. Since they break in market structure, I just want to see price here around this fair value gap or deliver to this other block here. So which is what I was looking for today in price. This was what I was looking for today in price. I was looking for today in price. Yeah. So I came around the 12 during the launch hour. So it took out this swing guy. We have this displacement here. This is a breakout of structure. For me, it's a breakout of structure after shifting market structure. Price will deliver and feed this fair value gap here. Right, also shifting market structure. We have a fair value gap within this, right? I entered the this is a swing guy. Why didn't I place it within this swing guy? Yeah, because the launch hour. Remember ICT concept, you need to during the launch hour you need to take a buy side for you to deliver to the sell side, or take a sell side for you to deliver to a buy side. So I was watching here, I took an entry within this point. Stop loss management was within this swing low. Why is it within this swing low? This is an metal short side. This is an metal high. Why it's meant to fill a fair value gap. This is just a simple thing ICT have been selling. This is side liquidity. I was also watching some this accumulation here from year to year as I said side. Once price delivered, let me just show you. Let me just show you the setup I had. So just a clean setup, just a fucking clean setup. I was tape reading with my phone. I was inside the car. I was on a journey. So this was how I was here. I took price here, fucked, because I was thinking maybe they are gonna take me off here. Launch tiny accumulation. I was within this public market structure shifts after taking a buy side liquidity. This is what I call Gaussian distribution. I just discovered it by myself. This is what I call Gaussian distribution from ICT. But ICT doesn't call this Gaussian. This is institutional market structure. That is we entered the price and top dropped, anticipating the low to be taken, displaced. This was a sell liquidity, price delivered beautifully, and it was a beautiful 1:3. Peace of guys, stay safe, use your risk management and keep trading. Make sure you keep trading. Keep trading no matter what, keep trading. It's gonna pay off soon. Keep trading.